Hi dear traders, today's Friday, July 8th, and I'm online again with a fresh market review prepared for InstaForex. Nowadays, there are lots of countries that are defaulting on their public debt. The issue is not widely discussed among analysts. This trouble concerns developing economies or emerging markets. Some of them have already declared defaults, others are on the verge of defaulting on their debt payments. Boris Johnson has been roasted in the global mass media. He has already announced his decision to resign as a Prime Minister. In the context of the British stock market, there are technical and fundamental causes for the fall of the benchmark UK stock index. Now let's discuss my trading ideas on the charts. The first instrument to discuss is gold as usual, so the metal remains at its lows and I didn't predict its growth. Let me remind you that my market analysis is based on two methods. The first one is the hunting for stop orders, which is a momentum trading strategy. The second one is the method of planning position on the grounds of a grid. For the time being, my trading idea for gold fits into the method of hunting for stop orders. In my understanding, gold should halt its decline after it breaks the price of $1,600 per troy ounce, the level formed in 2021. In fact, gold could make some upward retracements. By the way, today traders are alert to the US non-farm payrolls. Despite a retracement, the metal is set to tumble in my opinion. That level of 1,600 is not the only downward target. The next one is even lower. I used to hunt for that deep target but had not success. I'd like to remind you that global markets are hit by extreme turbulence. The global financial crisis of 2008 looks like a mere trifle compared to a future upheaval. Let's check how gold traded back in 2008. The asset had been growing before the crisis broke out. Gold survived the crisis all right. The ongoing rapid fall looks scary, so I've warned those traders who want to buy gold as a safe haven asset. I reckon the price will break 1,675 by all means. So my friends, buying gold is not the best idea during a crisis. The euro-dollar pair is trading lower and I don't have any trading ideas for this currency pair. I understand the fall of the euro-dollar pair to 1.03, the lowest level of 2017. Now the price is moving toward the lows of 2000 and I'm puzzled. A lot of traders are selling the pair, and don't forget about the US non-farm payrolls which are due tonight. Nobody can predict the jobless rate and other metrics, and I don't see any trend reversal patterns on the daily charts. Any trader wants to catch the moment of the trend reversal, so the pair is following and everyone wants to buy it at lows. There is a proverb: buy the market at its bottom and see the price even lower. So this is exactly what is going on now. And my advice is to stay away from trading the euro-dollar pair because I don't see any trading signals generated by any of my two methods. What about the pound-dollar pair? Despite political jitters in the British government, the pound-dollar pair is still trading lower. Everyone says that the pound is weak because of Johnson's resignation. You should be aware that the US dollar also makes an impact in the pound-dollar pair. Meanwhile, the greenback is holding the upper hand across the board. Besides, I don't see any reversal patterns on the daily chart. Now let's discuss the dollar-yen pair. The world community is appealed by the brutal assassination of Japan's ex-prime minister. Was a tragedy. The yen strengthened overnight. Shinzo Abe was shot dead by a former military man who was not satisfied by the policy of the top official. During his term, Shinzo Abe had an advisor who forged ahead with the yen's desperation through pumping up money supply. What I mean is that the yen went into a nosedive during Abe's ruling. Shinzo Abe stepped down in 2020, so let's watch the chart of the dollar-yen pair when he resigned. His policy termed Abenomics aims at the yen's desperation. Now, how to trade this currency pair. I assume that a lot of traders will rush to open short positions. The policy of the weak yen launched by Shinzo Abe is unacceptable for common people. The Bank of Japan might revise its policy towards monetary tightening, so the hawkish shift might reinforce the year. Besides, it might happen that the ascension is a sign for Horika Kuroda to take action. My message is that the Bank of Japan will realize the discontent of people about the weak yen. I noticed that traders are reluctant to trade following non-farm payrolls after pandemic. Everyone is keeping close tabs on inflation. Employment data of a little importance now, judging by charts and average volatility. That's all I wanted to tell you today. See you next week. Bye bye.